Oke, halo, selamat siang teman-teman traders BtcDana. Sudah mulai ya, kita sudah kembali lagi bersama dengan Lardio dan juga Ana. Boleh absen-absen dulu yang sudah hadir di sini ya, boleh absen-absen dulu. Sambil kita menunggu Lardio ya, sambil kita menunggu Lardio dan kemarin kita juga sudah menyaksikan FOMC bersama-sama ya, teman-teman ya. FOMC, waduh, kalau dilihat di market ya, kalau dilihat di market nih pada memerah, merah, merah, merah semua tuh. Boleh sambil absen-absen yang sudah hadir di sini ada siapa aja ya. Ana mau sharing screen dulu. Kita lihat, kita lihat kripto-kripto juga pada koreksi ya. Kemudian XHU juga katanya Junam. Tuh, XHU Junam. Gimana teman-teman kemarin untuk FOMC-nya? Pada loss berapa atau pada profit berapa nih? Kita coba lihat Doge USDT ya. BTC lagi koreksi. Kemudian XRP juga ada koreksinya ya kemarin ya. Kita coba lihat di time frame 30 menit. Apa kabar ya? Itu juga memerah juga. Lagi pada merah-merah nih, semua pair lagi pada merah-merah semua. Untung Ana semalam ketiduran ya, jadi nggak ikutan FOMC, nggak ikutan nonton market ya. Desember ini, wah banyak yang koreksi ke bawah. Oke, karena Lord dia sudah hadir, Ana mau stop dulu sharing screen-nya. Dan untuk teman-teman yang mau bertanya tentang FOMC semalam, boleh banget ya. Tapi sebelum bertanya, sebelum kita bahas tentang FOMC, boleh absen-absen dulu yang sudah hadir di sini. Ada siapa aja yang sudah hadir? Ada siapa aja yang sudah hadir? Dan juga nanti untuk sesi kedua, kita bakal ada kupon as usual ya teman-teman ya. Kita bakal ada kupon-kupon Minti nih. Di sini juga ada Minti dan Ana juga akan berbagi kupon yang pasti.
Kacau ya, ternyata semalam ini benar-benar out of nowhere. Semua US dollar penguatannya gila-gilaan. Dan ketika US dollar menguat gila-gilaan, guess what? Semua turun, termasuk saham, termasuk kripto. Kripto turun, pelemahan, saham turun, pelemahan. Ketika US dollar sedang kuat-kuatnya, semua dipukul turun. Bahkan yang this is unexpected juga US oil sih. US oil turun. Emas masih masih oke lah ya, emas ya. Emas masih oke lah ya. I mean, dia bisa dibilang masih ngikutin tren aja, continuous trend. Tapi shit show banget. Bener-bener FOMC kemarin. Semuanya mengarah ke US dollar, tidak ada aset yang jauh lebih baik per 17 Desember kemarin selain US dollar. 18 Desember, my bad. Semuanya loh, bener-bener semuanya. Hah, emang penurunan suku bunga itu bikin kuat USDT. Sebenarnya konsepnya bukan begitu ya. Ya, tapi kalau kamu ngelihat saat ini, itu kesimpulan yang paling masuk akal yang bisa kalian ambil. Kalau penurunan suku bunga memperkuat US dollar ya, sebenarnya nggak kayak gitu guys. Saya juga bingung ya mau ngejelasinnya gimana. This is unexpected banget. This is unexpected sekali. Token risk dan reward yang dipakai rugi cuma 400.000 saja. Oke. Kalian ada yang cuan nggak kemarin? FOMC. Siapa yang cuan pas FOMC, teman-teman? Siapa di antara kalian yang cuan habis
Kayaknya nggak
FOMC?
ada deh.
Adakah yang berhasil cuan? Saya begadang for nothing ya. Saya nggak dapat apa-apa guys. Entry pun enggak. Awalnya pas ngelihat merah ini saya mau entry nih jam 2-an di sini, tapi marketnya tidak mendukung ya. Beneran saya mau entry di sini nih. Di sini ya. Eh, oh enggak di sini deh. Sini. Time frame 5 menit. Hampir ya, saya pikir wah reversal pattern nih. Ini juga awalnya udah mulai turun kan. Wah, ini lebih make sense nih. Pas saya lihat dia hijau, merah, hijau, merah. Oke, next saya mau entry di atas, saya nggak jadi, nggak dapet. Shit show. Kenapa ya kena USD ya? So unexpected banget. Direksiuan pasang sell. Kok tahu Hidayat? Kok kamu tahu Rex Cuan pasang sell Hidayat? Berhasil nangis. Oh, pada nggak ada yang bisa entry ya. Oh, ada yang dapat tuh, Monster Ang. Mengambil posisi jual di XAU USD. Ya, that's a big balls move ya. Ham, 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 ham. By the way, dia kembali lagi guys ke 2.500 guys. Harga emasnya kembali lagi ke 2.500 ya. Shit show, FOMC shit show. Jadi memang kita kasih waktu, dikasih jeda 2 minggu di awal tuh enak banget kita trading ya. Gila itu lagi profit-profitnya. Sekarang kok harapannya makin tipis ya. Tekanan harganya tuh makin besar ya. Mungkin di satu sisi juga ya make sense lah ya. Ini mendekati tahun baru. Market biasanya akan ada koreksi minor. Koreksi minornya jadi sebagai koreksi minor itu disebabkan oleh orang-orang yang menarik investasi mereka ya. Biasa terjadi di bulan Desember. Desember awalnya manis banget, gila. Juga saya udah madesu nih saham saya. Holy crap. Sadis bet ya. Turunnya sadis bet ya. Semuanya udah nunjukin oversold. Harusnya manturnya kemarin loh. Apa kemarin malah nggak jadi mantul, ditekan terus dengan tekanan harga ya. Ini masih nggak bisa nih dianalisa teknikal nih saham ini nih. Foundernya masih kebanyakan megangnya, gampang banget mereka buang-buanginnya ya. Dia hanya bilang di live-nya Jax mau sell katanya. Profit ya kalau gitu kalau mau sell. GBPUSD terjun lagi ya, lebih dalam lagi ya. Ada kemarin GBPUSD kita udah planning ya, udah planning cakep, cantik mau ngebuy bro. GBPUSD turun dia jebret, turun dia, habis itu turun lebih dalam lagi. 2573, 252, $5. $5. Too much $5. Resikonya 100.000 rupiah, too much ya. Untuk Forex ya. Kalian nggak ada saran nih? Kalau ada yang ingin tanyain, kalian boleh drop aja di live chat ya. Kalau misalnya kalian juga ada saran atau mau bertanya seputar market, boleh nih. Kasih tahu ya di live chat ya. Saya harap sih kalian ada masukan guys, market apa gitu. Semuanya turun ya by the way ya. XRP juga kalau yang mau kalian tanya-tanyain turun nih XRP bro. Shit show, makanya semalam itu bener-beneran shit show, sumpah. Jelek banget. Jelek banget. Iya saya bisa dibilang hoki lah nggak entry. Cuma kalau ada yang masih maksain entry kan, gimana ya? Very very bad man. XRP. Ya, XRP mau kemana hari ini? Saya betting besar bahwa XAUSD itu sideways ya. Sidewaysnya juga kalau menurut klaim saya kemarin ini kan saya tanda panah sampai sini nih turunnya nih. Ya kan penurunan sampai sini nih. Nah, sidewaysnya itu seharusnya dia mantul gini dia naik lagi. Nah, faktanya ada unexpected movement di sini ya, penurunan yang seperti ini. Ini saya jadi bertanya-tanya nih, XAU mau kemana nih? Sideways condong ke bearish ya, bisa tembus di bawah 2500 ke 2400, sangat doable, sangat masuk akal. Kalau dia ingin ada penurunan lebih lanjut ke 2400 tapi turun di bawah 2400 seems mustahil. Dia bisa penurunan lebih lanjut tapi turun di bawah 2400 seems mustahil. Jadi lebih masuk akal untuk ambil entry posisi beli di 2400. Harga masih jauh. XAU ya. Kena MC pagi-pagi buka saldo ilah mining room Doge gimana Lord? Doge juga nih shit show roti buaya. Shit show. Doge ditembus kalau sekarang udah fix ya. Dia di bawah $0,4. Sekarang udah fix. Ini menjadi resistance nih. Ini jadi resistance sekarang. Alah, ini mah mimpi mau ke $1 macem mana ya? Jadi resisten guys. Untuk Doge sendiri kalau kita ngeliat Bollinger Band nggak ada kesimpulan ya. Nggak ada kesimpulan yang kita dapat dari Bollinger Band. Kita ngeliat dari stokastik juga tidak ada kesimpulan yang kita dapat. Jujur masih bingung sih untuk USDT. Biarkan aja dulu mereka bergerak. Sembari kita mengumpulkan informasi lebih lanjut seputar market, jadi kita lebih akurat dalam mengambil kesimpulannya. Ntar coba analisa Bitcoin pergerakannya mau kemana dulu. Saya baru datang. Oke, Kevin. Kalau kita bicara dari Bitcoin, Bitcoin sekarang turun ya di bawah 100 ribu ya. Malah saya mau ngomong 100 ribu ini takutnya. 100 ribu ini menjadi resistance. Kalau tadi kan Doge 0,4 dolar, maksudnya masih di atas ya. Ini resistennya deket, deket banget. Kalau kalian ngeliat juga dari data CoinGlass, kita melihat awalnya seharusnya ini merah ya. Seharusnya merah nih dari Bitcoin. Bukan merah, sorry. Maksud saya berkurang ya. Sekarang tanggal 19 sekarang. Sekarang tanggal 19 kita bisa ngelihat pergerakannya makin lama makin turun ya. Total open interest ini bisa dibilang total ketertarikan orang kepada Bitcoin. Harganya jauh di atas open interest yang ada ya. Harganya jauh di atas open interest yang ada seperti ini. Biasanya kalau open interestnya jauh di atas harga, ini jauh lebih nyaman untuk kita open posisi beli. Tapi kan ini nyatanya harganya seperti ini ya. Harganya ada di atas, open interestnya ada di bawah. Nanti lama nggak lama kelamaan ini akan menyatu nih. Open interest bisa dibilang open posisi lah. Jadi enak ketika kita trading Bitcoin posisi beli dari 6 sampai 10 Desember. Setelah 10 Desember ini rada susah ya. Dan terutama di sini nih, begitu itu harganya turun nih shit show banget nih. Bener-bener jelek. Jadi saya mau bilang Bitcoin sell berdasarkan data analisa dari CoinGlass, dari open interest, dari candlestick patternnya juga. Bener-bener shit show, man. Solana gimana, Lord? Oke. Untuk Solana, saya rekomendasi terakhir di harga 200 dolar ya. Saya rekomendasi terakhir di harga 200 dolar. Dari pergerakan ini aja sebenarnya bisa dibeli, tapi resiko kamu minus 8 dolar ya. Minus 8 dolar. Lumayan besar resikonya, kalau mau diambil boleh aja. Favorable untuk diambil posisi beli saat sekarang. Kenapa? Karena time frame 1 jam, sorry. Ini yang kita sebut dengan konvergen ya. Di sini momentumnya masih bullish, banyak pembeli. Di satu sisi di time frame lebih kecil, penurunannya dibatasi ya. Penurunan dibatasi, overall fine lah. Kalau mau ngambil sekarang juga nggak masalah. Yang jadi masalah cuma kamu mau nggak terima resiko besarnya. Ini kan risknya yang kamu ambil. Nah, mengambil di sini lebih masuk akal. Posisi buy targetnya sekali lagi di 220 sebagai TP ya. Begitu ya untuk Solana ya. Kena cut terus. Kenapa cut? Isi sudah tahu bulat yang mengisi ulang 1.000 dolar. Wow. Wow, 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 wow. Mamma mia, waktunya trading kah tahu bulat? Gimana tahu bulat profitnya kemarin? Berarti wait and see dulu ya, Lord. Iya, sekarang wait and see. Kemarin saya udah kecemplung ya. Ya that's life ya, namanya hidup. Cuma ya lemes sih lemes, X lemes sih lemes. Tapi kan profit kita kemarin-kemarin jauh-jauh lebih banyak daripada rugi saya kemarin ya. Jadi santuy lah, santuy. Santuy lah. Nggak saya kembali ke posisi akun saya di bulan Maret 2024 juga kan. Nggak saya turun ke 60.000 dolar juga kan. Saya minus lumayan cuma nggak turun ke 60.000 dolar. Karena belum turun ke 60.000 dolar. Fine lah bro. Aman lah, cincai. Kira-kira pembalikan Bitcoin setelah sell nanti. Tanggal 10 ya. Tanggal 10 artinya baik yang tanggal berapa sih? Puncak kelima sampai 5 Desember. Ah, shit, 5 Desember kayak gini lagi. Ada beberapa pilihan, ada beberapa opsi. Ada dari 90.000 dolar, pembalikannya tadi 95.000 dolar. Artinya masih punya 5.000 dolar penurunan Bitcoin yang harus kita mitigasi ya. ETC USDT. Sudah lama saya nggak nyentuh peri ini teman-teman. Kalau boleh jujur ya. 4 jam ada reversal pattern, tapi ini sus karena reversal patternnya bahkan nggak bisa menekan harga 30, artinya masih dominasi seller. Sell aja lah kalau ETC ya. Sell aja lah. Karena ini ETC juga di all time high 35 dolar. Saya rasa kalau secara valuasi ETC jauh lah ya exposure-nya daripada Ethereum, daripada Bitcoin. Biasanya kalau Bitcoin mulai melihat tanda-tanda pelemahan, ETC yang akan turun pertama kali. Dan kalau Bitcoin menunjukkan tanda-tanda penaikan, ETC yang akan naik terakhir kali. Biasanya ya, karena saya ngelihat data past performance. Tapi tetap past performance tidak bisa dijadikan acuan. Lihat dong, leaderboard harian, tahu masuk Lord. Oh itu tahu bulat ya, di sensor-sensor gitu. Saya pikir itu jadi tahi lalat. 2.603 dolar, 0,08 mantap. Bisa kamu profit tahu bulat. Baru dengar abang, dia bisa loss lah memang bisa ya. Bukan berarti karena saya setiap minggu masuk top leaderboard tidak saya 100% profit, bukan gitu. Shit show. Dan saya rasa bukan saya doang ya, trader profesional yang loss. Coba aja lihat. Semua market bro, semua market itu pelemahan kecuali US dollar. Semua market kalau kalian mau cek ya, itu turun semuanya. Holy shit. Gila. Unexpected man. Berarti Solana masih buy apa sell? Solana buy. ETC sell. Kirain cuma saya aja bang yang loss ya enggak lah Joko Santoso. Kalau minggu lalu iya kamu doang yang loss. Minggu lalu lagi kamu doang yang loss. Minggu lalu lagi kamu doang yang loss. Hari ini mah saya kena ya. Saya udah berekspektasi banyak, saya sudah berharap banyak. PMC. Mau dibahas soal FOMC? Apa kita bahas FOMC aja ya? Nunggu signal aja deh. Sama nih saya juga nunggu signal aja ya. ETC saya naik bang, malah 60%. Mabok apa sih kamu? Bang Dio, Bitcoin terjunnya sampai harga 40.000 ya. Yes, Paliot SJR. Sekarang kan yang menang kan Donald Trump. Kalau kemarin kan ekspektasinya kalau Kamala Harris yang menang, pukulannya bisa cepat banget ya, maksud saya bisa jauh banget ditekan harganya. Karena akan keluar kebijakan-kebijakan yang tidak akan pro kepada kripto. Dengan kemenangan Donald Trump ini ada secerca harapan, walaupun sekali lagi kita nggak nyebut harapan. belum tentu harapan itu akan terjadi kan. Ekspektasi saya dia bisa turun sampai 50.000 dolar. Yes, Bitcoin bisa terjun sampai 50.000 dolar. Ini analisa berdasarkan data. Lord, tadi malam kan suku bunga turun, tapi kenapa dorong malah menguat dan banyak market memerah, bukan sebaliknya? Harusnya apa alasannya? Pertanyaan yang bagus, Kevin. Ada yang bisa jawab? Pertanyaan yang sangat bagus, Kevin. Ada yang bisa bantu jawab? Suka-suka orang yang gerakin pasar, Bang. Bener tuh kata Paletpu SJR ya. Oil gimana, Lord? Oil potensi ya, di bawah 70 dolar, bro. Potensi buat kita sikat-sikat lagi. Oil potensi untuk kita beli-beliin tentunya. We are not allowed to own Bitcoin, said at press conference following the Fed latest two-day policy meeting, in which policymakers cut rates as expected while signaling a less certain path for monetary policy in the months ahead. Ya masuk akal lah kalau mereka nggak boleh punya Bitcoin ya. Indonesia juga nggak boleh kok. Oh gimana lo setelah FOMC? Aduh. Baru saya repot mau baca kalau ginian. Oke, kami tidak diperbolehkan memiliki Bitcoin, kata Powell dalam konferensi pers setelah pertemuan kebijakan 2 hari terakhir Fed, di mana para pembuat kebijakan memangkas suku bunga seperti yang diharapkan sambil mengisyaratkan jalur yang kurang pasti. Bang Dio, Bitcoin terjunnya sampai harga 40.000 ya? Iya. Ekspektasi saya menurut data yang ada, Bitcoin besar kemungkinan untuk terjun sampai 50.000. Melihat past performance, melihat kondisi open interest yang ada. Open interest saat ini tidak beda jauh dengan open interest di bulan Maret. Sedangkan kita tahu di bulan Maret itu masih berada di harga 60.000 dolar dan Bitcoin sekarang ada di 90.000 dolar. Ya. Penurunan sampai 50.000 dolar masuk akal. Gas bisa kali Bitcoin. Boleh. Sembari kita nge-cover ya.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong overall and has made significant progress toward our goals over the past 2 years. The labor market has cooled from its formerly overheated state and remains solid. Inflation has moved much closer to our 2% longer run goal. We're committed to maintaining our economy's strength by supporting maximum employment and returning inflation to our 2% goal. To that end, today, the Federal Open Market Committee decided to take another step in reducing the degree of policy restraint by lowering our policy interest rate by a 1/4 percentage point. We also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose at an annual rate of 2.8% in the third quarter, about the same pace as in the second quarter. Growth of consumer spending has remained resilient, and investment in equipment and intangibles has strengthened. In contrast, activity in the housing sector has been weak. Overall, improving supply conditions have supported the strong performance of the U.S. economy over the past year. In our summary of economic projections, committee participants generally expect GDP growth to remain solid, with a median projection of about 2% over the next few years. In the labor market, conditions remain solid. Payroll job gains have slowed from earlier in the year, averaging 173,000 per month over the past 3 months. The unemployment rate is higher than it was a year ago, but at 4.2% in November, it has remained low. Nominal wage growth has eased over the past year, and the jobs to workers gap has narrowed. Overall, a broad set of indicators suggests that conditions in the labor market are now less tight than in 2019. The labor market is not a source of significant inflationary pressures. The median projection for the unemployment rate in the SEP is 4.2% at the end of this year and 4.3% over the next few years. Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.5% over the 12 months ending in November, and that, excluding the volatile food and energy categories, core PCE prices rose 2.8%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The median projection in the SEP for total PCE inflation is 2.4% this year and 2.5% next year, somewhat higher than projected in September. Thereafter, the median projection falls to our 2% objective. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. We see the risks to achieving our employment and inflation goals as being roughly in balance, and we are attentive to the risks on both sides of our mandate. At today's meeting, the committee decided to lower the target range for the federal funds rate by a quarter percentage point to 4.25% to 4.5%. We've been moving policy toward a more neutral setting in order to maintain the strength of the economy and the labor market, while enabling further progress on inflation. With today's action, we have lowered our policy rate by a full percentage point from its peak, and our policy stance is now significantly less restrictive. We can therefore be more cautious as we consider further adjustments to our policy rate. We know that reducing policy restraint too fast or too much could hinder progress on inflation. At the same time, reducing policy restraint too slowly or too little could unduly weaken economic activity and employment. In considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will assess incoming data, the evolving outlook, and the balance of risks. We're not on any preset course. In our summary of economic projections, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate, based on what each participant judges to be the most likely scenario going forward. The median participant projects that the appropriate level of the federal funds rate will be 3.9% at the end of next year and 3.4% at the end of 2026. These median projections are somewhat higher than in September, consistent with the firmer inflation projection. These projections, however, are not a committee plan or decision. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly, or inflation were to fall more quickly than anticipated, we can ease policy more quickly. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. On a technical note, we lowered the offering rate on our overnight reverse repo facility to align it with the bottom of the target range for the federal funds rate, its typical configuration. Technical adjustments of this kind have no bearing on the stance of monetary policy. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Gina Smialik with the New York Times. Thank you for taking our questions. I wonder if you could talk a little bit about why officials think it's appropriate to cut rates at all in 2025 if inflation is expected to remain firm throughout the year. And what would you expect at this point the timing might look like? Would a January cut potentially be possible, or does a pause next month seem more likely?
Well, so let me start by saying why we cut today and then move to 2025. So I would say today was a closer call, but we decided it was the right call because we thought it was the best decision to foster achievement of both of our goals: maximum employment and price stability. We see the risks as two-sided: moving too slowly and needlessly undermine economic activity in the labor market, or move too quickly and needlessly undermine our progress on inflation. So we're trying to steer between those two risks. And on balance, we decided to go ahead with a further cut, and I'll give you some details on why. Downside risks to the labor market do appear to have diminished, but the labor market is now looser than pre-pandemic, and it's clearly still cooling further, so far in a gradual and orderly way. We don't think we need further cooling in the labor market to get inflation down to 2%. Job creation is now well below the level, or certainly below the level, that would hold unemployment constant. The job finding rate is low and declining, and other Good afternoon. On track, and I'll tell you why. We've made a great deal of progress. 12-month core inflation, as I mentioned, through November is estimated at 2.8%, down from a high of 5.6%. But 12-month inflation has actually been moving sideways as we are lapping the very. I think that the slower pace of cuts for next year really reflects both the higher inflation readings we've had this year and the expectation that inflation will be higher. You saw in the SEP that risks and uncertainty around inflation we see as higher. Nonetheless, we see ourselves as still on track to continue to cut. I think the actual cuts that we make next year will not be because of anything we wrote down today. We're going to react to data. That's just the general sense of what the committee thinks is likely to be appropriate.
Sorry, just one quick follow-up. Why, I guess, would you make those cuts? Like, what would be the trigger to cut?
So we're to cut further after this point. I would say it this way: we've reduced our policy rate now by 100 basis points. We're significantly closer to neutral. At 4.3% and change, we believe policy is still meaningfully restrictive. But as for additional cuts, we're going to be looking for further progress on inflation, as well as continued strength in the labor market. And as long as the economy and the labor market are solid, we can be cautious about as we consider further cuts. And all of that is reflected, to your question, in the December SEP, which shows a median forecast of now 2 cuts next year compared to 4 in September.
Howard Schneider with Reuters, and thanks for the opportunity to ask you a question. So this does seem similar to the dynamic in 2016 during the last transition to a Trump administration, where the committee saw slightly tighter policy, in part in expected anticipation of the fiscal policy stance that was seen evolving over the year. Some of it was a data mark-to-market exercise, and some of it was anticipation of fiscal. What's the split on this one? How much of this was accounting for inflation data that was coming in, and how much of it is expecting that there will be inflationary fiscal policy next year?
I'd say I'd point to 5 or 6 things, and let me start by saying that we think the economy is in a really good place, and we think policy is in a really good place. Let's remember that the economy is growing 2.5% this year, that inflation has come down by 50% from 5.6% to 2.6%. Headline inflation is 2.5% on a 12-month basis. We're actually in a really good starting place here. But since, so what's really driving the slower rate cut path? First thing is growth is stronger, right? The economy grew faster in the second half of 2024 so far than we had expected, and is expected to be above what our expectations in September next year as well. Unemployment is lower, and in the SEP you'll see that participants think that the downside risks are less and uncertainty is less. So that's more strength, right? Inflation is higher, as we talked about. Inflation's higher this year. It's also higher in the forecast next year. I'd also point out that we're closer to the neutral rate, which is another reason to be cautious about further moves. But then getting to your point, there's also there's uncertainty. Uncertainty around inflation, I pointed out, is actually higher. It's also in the case of some people, the way I would say it is this. Some people did take a very preliminary step and start to incorporate highly conditional estimates of economic effects of policies into their forecasts at this meeting, and said so in the meeting. Some people said they didn't do so, and some people didn't say whether they did or not. So we have people making a bunch of different approaches to that. But some did identify policy uncertainty as one of the reasons for their writing down more uncertainty around inflation. And the point about uncertainty is it's kind of common sense thinking that when the path is uncertain, you go a little bit slower. It's not unlike driving on a foggy night or walking into a dark room full of furniture. You just slow down, and so that may have affected some of the people. But as I said, there's a range of approaches on the committee.
If I could follow up on that, you mentioned the risk and uncertainty indexes toward the back of the document. The upside risk to inflation jumped quite substantially. The only thing really that's happened, you mentioned that the disinflationary story remains intact, yet the risk weighting has jumped to the upside. The only real thing that's happened is November 5th in the meantime. Is it fair to say that that's what's driving the higher sense of upside risk on inflation?
Actually, that's not the only thing that's happened. What's happened is that our forecasts for inflation for this year, I think, are 0.5 higher than they were in September. So you had 2 months of higher inflation in September and October. As I mentioned, November is back on track, but once again, we've had a year-end projection for inflation, and it's kind of fallen apart as we've approached the end of the year. So that is certainly a large factor in people's thinking. I can tell you that might be the single biggest factor is inflation has once again underperformed relative to expectations. It's still going to be between 2.5 and 3. It's way below where it was, but we really want to see progress on inflation. As I mentioned, as we think about further cuts, we're going to be looking for progress on inflation. We have been moving sideways on 12-month inflation as the 12-month window moves. That's in part because inflation was very, very low measured in the fourth quarter of 2023. Nonetheless, as we go forward, we're going to want to be seeing further progress on bringing inflation down and keeping a solid labor market.
Chris.
Thank you, Chris Rugaber at Associated Press. Thanks for taking the question. In September 2018, the Fed staff in the Teal Book discussed a policy of looking through any new tariffs as long as there were one-time increases and inflation expectations remained anchored. Could you comment on if that analysis remains effective and any other thinking on tariffs generally that you can share?
So I do think that the September 2018 Teal Book alternative simulations are a good place to start. I happen to have brought them here with me today. I'm sure you have them too. They're a good starting point, and I would just say, it's 6 years old analysis, but nonetheless, this is still, I think, the right questions to ask. And there were two simulations. One was seeing through, one was not. And I'd point you. There's some language in the see-through paragraph that says, that considers situations in which it might be appropriate to see through inflation, and then names some conditions that in which it might not be. In any case, this is not a question that's in front of us right now. We won't face that question. We don't know when we'll face that question. What the committee's doing now is discussing pathways and understanding, again, the ways in which tariff-driven inflation can affect, tariffs can affect inflation in the economy, and how to think about that. So we've done a good bit of work. All of us have, each of us has, and it puts us in position when we finally do see what the actual policies are to make a more careful, thoughtful assessment of what might be the appropriate policy response.
Great. And just a quick follow-up. Given the recent bout of inflation that we've been through, with consumers seeing how prices can rise and businesses seeing that they can raise prices at least for some time, does that make it a little bit riskier to look through tariffs? I mean, do you feel you have to respond more quickly to inflation threats, given what we've seen in the past few years?
So the main thing is, and this is also a point in these alternative simulations, is there are just many, many factors that go into how much tariffs will even go into consumer inflation. How persistent will that be? And so we just don't know really very much at all about the actual policies. So it's very premature to try to make any kind of conclusion. We don't know what will be tariffed from what countries, for how long, in what size. We don't know whether there'll be retaliatory tariffs. We don't know what the transmission of any of that will be into consumer prices. To your point as well, I wouldn't say that we know whether the last episode is or is not a good model for what happened. You pointed out we've just been through a period of high inflation. We've just gotten through that period. That's a difference. There was also quite a bit of diversion of trade away from China to other countries since that. That may have effects. I don't know. I just think we need to take our time, not rush, and make a very careful assessment, but only when we've actually seen what the policies are and how they're implemented. And we're just not at that stage. We're at the stage of doing what other forecasters are doing, which is kind of thinking about these questions, but not trying to get to definitive answers for some time.
Nick.
Nick Timmeros of the Wall Street Journal. Chair Powell, to make sure I understand, participants today revised up their core PCE inflation projection for 25 so that the central tendency runs from 2.5% to 2.7%. And as Howard noted earlier, most of the committee sees the risks to those projections to the upside. So if inflation only declines next year from 2.8 to 2.5 to 2.7, what would compel the committee to be cutting in that situation?
Let me find these numbers. So we have inflation coming down, core inflation coming down to 2.5 next year. that'd be significant progress. You see a slower path. I think that does take on board that we want to see real progress, but we'd be seeing meaningful progress to get inflation down to that level. That wouldn't be all the way to 2%, but that would be better than this year. This year will be 2.8 or 2.9. That would be meaningful. We also have to think about the labor market, and while we have the labor market forecast as being in good shape, we are also mindful that it is still out there very gradually cooling, so far in an orderly, gradual way. But it's also something we need to keep our eye on.
I guess if I could follow up, if somebody looked at these projections and also the insertion of the extent and timing language in the statement, which has been used at times in the past when the committee thinks maybe it's going to be on hold for a while, and they said, gee, this looks like it could be the last rate cut for some time, would they be mistaken to infer that?
So that's not any decision that we made at all. Let me explain extent and timing. So the sense of that wording is to make clear that if the economy does evolve about as anticipated, we're at a point at which it would be appropriate to slow the pace of rate cuts. So extent, that just relates to how much further we can reduce our policy rate consistent with getting to a neutral stance. Clearly, that distance has shrunk by 100 basis points. So it's significantly smaller. So that's the extent question. And we're going to be looking for further progress on inflation as well as a strong labor market to make those cuts. Timing just suggests, again, that we're at a place where we assuming the economy develops as expected, we're at or near a level that will make it appropriate to slow the pace of adjustment. So that's what we mean by that. We're not trying to make decisions. About the longer run. We're trying to make sensible policy as we go, and I would emphasize the uncertainty, which is it's just a function of the fact that we expect significant policy changes. There's nothing really unusual about that. I think we need to see what they are and see what the effects they will have. We'll have a much clearer picture, I think, when that happens.
Mike.
Michael McKee from Bloomberg Radio and Television. Even though you've cut rates by 100 basis points this year, we haven't seen much change in mortgages, auto loan rates, or credit card rates. You say you're significantly restrictive. Are you running a risk that the markets are fighting against you and the economy could be more at risk of a slowdown than you anticipate? So the rates that you talked about are really longer run rates, and they are affected to some extent by Fed policy, but they're also affected by many other things. And longer rates have actually gone up quite a bit since September, as you well know, and those are the things that drive, for example, mortgage rates more than short-term rates do. So we look at that, but we look at all financial conditions, and then we look at what's happening in the economy. So what we see happening in the economy, again, is most forecasters have been calling for a slowdown in growth for a very long time, and it keeps not happening. So we're now well into another year of growth that looks like it might be 2.5%.
Second and third quarters were right about at the same level. So the U.S. economy is just performing very, very well, substantially better than our global peer group. And there's no reason to think a downturn is any more likely than it usually is. So the outlook is pretty bright for our economy. We have to stay on task, though, and continue to have restrictive policies so that we can get inflation down to 2%. We're also going to be looking out for the labor market. We want to keep the labor market pretty close to where it is. We're pretty close to estimates of the natural rate of unemployment. Job creation is a little below the level that would keep it there, but nonetheless close. And so that's what our policy is trying to achieve.
If I could follow up by asking about your formulation for beginning rate cuts included the phrase, we need to have confidence that inflation is moving down towards our target. Given the fact that you've raised your forecast for next year, do you have confidence or are you uncertain about the path of inflation going forward?
So confidence was our test for raising rates. And, you know, we made, look at the broader sweep. We've made just a great deal of progress. We're well into the twos in core inflation, and around 2.5 or even lower than that we have been for headline inflation. So I would say I'm confident that inflation has come down a great deal, and I'm confident in the story about why it's come down and why that portends well. And I'll tell you why. Again, you do see with housing services inflation, which is one that we've really worried about, it really has come down now quite steadily at a slower pace than we thought, 2 years ago. But it's nonetheless steadily coming down as market rents, start to equilibrate better with new leases that turn over, not new tenants, but new leases. Market rents is new leases. So that's happening. That process is ongoing pretty much as we expect. Goods inflation, which is another big piece of it, has returned right to the range where it was before the pandemic. Just for some months this year, it kind of moved up in a bumpy way because of used cars and things like that. But we think overall that should generally be in the range it was in. That leaves non-housing services, and market-based non-housing services are in good shape. It's non-market services, and those are services that are imputed rather than measured directly, and they don't. We think they don't really tell us much about the about tightness in the economy. They don't really reflect that. I mean, a good example is financial services, which is really done off of asset prices. And that's how that inflation works. So the overall picture, the story of why inflation should be coming down, is still intact. In particular, the labor market. Look at the labor market. It is cooler by so many measures now, modestly cooler than it was in 2019, a year when inflation was well under 2%. So it's not a source of inflationary pressures. Not to say there aren't regional and particular professions where labor is tight. But overall, you're not getting inflationary impulses of any significance from the labor market. So what's the story? The story is still just we're unwinding from these large shocks that the economy got in 2021 and 22 in, for example, housing services. In that the appropriate level of the
Astaga, ternyata dari tadi saya ngomong ke mute ya. Oh my God. Oke, jadi kita tadi, saya ulang lagi nih, kita lagi membahas soal FOMC. Alasannya adalah, seperti yang kalian bisa lihat, ini adalah Federal Funds Rate. Kalau kita bisa mengentry posisi, kasar ya, kita bisa beli XAUUSD nih, sampai 2026. Kita tahan posisinya, besar kemungkinan kita akan profit berdasarkan dot plot dari Federal Funds Rate ini. Jadi ini adalah sesuatu yang momentary doang, sesuatu yang sementara doang. Iya, marketnya crash di mana-mana, tetapi kalau menurut penjelasannya tadi, kalau menurut kondisi yang ada, overall untuk longer run-nya kemungkinan besar mereka masih akan naik. Tapi kan itu tidak masuk akal kalau kita beli sekarang, habis itu kita take profit di tahun 2026, bener kan? Tidak masuk akal, guys. Jadi yang bisa kita lakukan adalah kita lagi menonton alasan, argumen supaya kita bisa menemukan clue juga kira-kira sampai kapan sih penurunan seperti ini akan terjadi dan nextnya posisi apa dan target apa yang bisa kita cari. Ya ampun, tadi saya lagi ngejelasin ternyata saya ke-mute ya. Makanya kita ngelihat ini ya, KLM 350.
By many measures, and we're watching that closely. It's not cooling in a quick or in a way that really raises.
By the way, kalau kalian ada pertanyaan, kalian nggak paham sama yang mereka omongin, kira-kira bagaimana kita melihat ini supaya kita bisa profit ya. Kira-kira bagaimana ya kita harus melihat kondisi ekonomi saat sekarang ini supaya kita bisa mendapatkan profit dari market. Drop aja di live chat, pasti saya jawab kok, teman-teman.
Concerns. I think, you pointed out, participants in the FOMC really thought that the risks and uncertainty had improved relative to the labor market. And it's because things have just gotten a little bit better. It doesn't, the unemployment rate flat and things like that. Nonetheless, we're watching it closely.
If the idea, though, is that no additional kind of softening in the labor market is welcome here, what's to prevent that from happening if rates are still restrictive?
So what I said is we don't think we need further softening to get to 2% inflation. That's what I'm saying. Not that it's not welcome. We don't need it, we don't think. If you had a situation where inflation is moving around by a tenth every few months, that's, we'd have to weigh that against the fact that inflation has in recent months been moving sideways in the 12-month window. And so we've got to weigh them both. And at this point, for a while there, we were only really focused, mainly focused on inflation. We've now gotten to a place where the risks to the two are we think are roughly in balance. And so that's how we think about it.
Steve.
Mr. Chairman, I did not hear you use the word recalibration today. And I'm just wondering if the recalibration phase is over and what you might call this new phase and whether the criteria for changing rates is somehow different and higher than it was before. Thanks.
We're not renaming the phase yet, but we may get around to that. But no, I would say we are, though, in a new phase in the process, as I said. So, and that's just because we've reduced our policy rate by 100 basis points. We're significantly closer to neutral. We still think where we are is meaningfully restrictive. And I think from this point forward, it's appropriate to move cautiously and look for progress on inflation. We've done a lot to support economic activity by cutting 100 basis points, and that's a good thing. I support the decision, and I think it was the right decision to make. I think from now, we are in a place where the risks really are in balance, and we need to see progress on inflation, and that's how we're thinking about it. So it is kind of a new thing. We moved pretty quickly to get to here, and I think going forward, obviously, we're going to be moving slower, which is consistent with the SEP.
I wonder if I could follow up and ask you how much you or the committee are looking through some of the high numbers we've had in the recent inflation numbers. For example, cars being up maybe because of the hurricanes, eggs because of the avian flu, that kind of stuff, and then looking forward perhaps to housing inflation coming down as it did in the recent report.
So we always try to be careful about not throwing out the numbers we don't like. You know, it's just an occupational hazard is to look, oh, those high months are wrong. What about the low months? You know, we have a very low month potentially in November. You know, it's estimated by many to be in the mid-teens for core PCE. So that could be idiosyncratically low. We try to look at not just a couple or 3 months. We shouldn't have, our position shouldn't change based on 2 or 3 months of good or bad data. We have a long string now of inflation coming down gradually over time. As I mentioned, 12-month, I think it's 12-month headlines 2.5, 12-month core is 2.8. That's way better than we were. We still have some work to do, though, is how we're looking at it, and we need policy to remain restrictive to get that work done, we think.
Neil.
Thanks, Chair. Thank you, Chair Powell. Neil Irwin from Axios. Financial markets have been very buoyant really all year. Is the committee comfortable with where financial conditions are, or do you see a risk that looseness in financial conditions could undermine progress on your inflation target?
So we do look carefully at financial conditions, of course, that's part of what we do, but you know, we really look carefully at is the performance of our goal variables and how are we affecting the economy. So what we've seen over the course of, just take the last year, we've seen inflation, well, over the last couple of years come down a lot. We've seen the labor market cool off quite a bit. That suggests that our policy is restrictive. We can also look more directly at the parts of the economy that are affected by that are interest sensitive, like particularly housing. Housing activity is very low, and that's partly significantly because of our policy. So we think our policy is working, it's transmitting, and it's having the effects on our goal variables that we would want. You know, a lot of things move financial conditions around, as you know, and we don't really control those, but I'd say we see the effects we're hoping to see on the goal variables and the places where we'd expect to see it.
So if I may, speaking of assets that have been buoyant, do you see?
Oh, ini chatnya ternyata banyak di bawah ya. Saya nggak deh. Kode komit suaranya sampai nggak nyadar.
Tapi mungkin bisa kita lanjut nanti di sesi kedua ya, teman-teman ya. Ini pas banget waktunya juga udah habis nih loh.
Oke. Aneh loh, chatnya kok nggak gerak ya di saya. Ternyata udah banyak, nggak kebaca guys. Sorry. Tapi karena waktu udah habis, kita lanjut lagi di sesi 2 ya, 3435.
Oke guys, kita lanjut lagi
3435.
nanti di sesi kedua jam 14.30 ya. Kalau gitu, sekarang waktunya Lerdio dan Ana untuk ucapin thank you for tuning in guys. Dan bye-bye.